Hi guys, hello. Good evening
Hello.
and welcome back. Hi. So finally we decided to take a short break from talking about tech stocks in Malaysia. But that doesn't mean we go on a break on our weekly not so late night show. So yeah, we wanted to do something also companies within Malaysia, but maybe from a different sector, so that for investors you don't just keep your options, keep your focus just mainly on the tech sector. There are still a lot of good companies from other sectors as well. Today one is a proven good company. Probably the only question you want to ask yourself is how low the price would you consider to buy this company, because this company uh, has been a proven multi-bagger. If you guys have heard of this term before, basically a stock where the share price can go up more than 100% a few times, 200%, 300%, 400%. That's the kind of stocks that we call this kind of stocks multi-bagger. And why can a stock become a multi-bagger? It's just a very simple reason. The business keeps get bigger and bigger. The company share price also follow the company's business to grow as well. Very straightforward. And today's company is none other than QL, Resources Berhad. If you are new to investment, you might not have heard this company, but definitely you have went to their convenience store before. They are operating the Family Mart franchise within Malaysia. And I think it's one of the, if not the best, convenience store in Malaysia currently. What do you think, Juming? Is Family Mart the best convenience store in Malaysia right now? Can we also ask the audience, do you think Family Mart is the best, or do you think there are other convenience store that is better than Family Mart? But Juming, what are your thoughts?
Yeah, but I think they offer a very unique proposition compared to what we used to have to buy the breakfast when we are going to work from 7-Eleven, but it's very expensive and not tasty. Then my news try to be coming out with their own business model that suddenly the my news become my food lah. A lot of people go in there. Personally, I think my news is okay. A lot of choices, but Family Mart is provide a very good alternative for you to taste some food and you always have the feeling that this is very Japanese style. A lot of food that they serve is very Japanese. You will see green tea, and one of the hit thing inside Family Mart should be the green tea ice cream. It used to create a
Soft
lot of
serve.
hoo-ha
Yeah.
when it got launched. So I think all this is a positive part, but of course, Family Mart is slightly on the high side if you talk about the price point. So this is the few thing that observation are from a layman perspective. But QL resources is way bigger than this. So maybe we can straight away start the presentation.
All right. So yeah, I just saw that Darren has just also logged in. Hi, Darren. Yeah, you're right. QR Resources is definitely a growth company, but I think the question that all of us want to know is whether this company can continue to grow or not, and by how much. So as always, a little disclaimer: this company that we're going to share with you is just for sharing purposes. It's not to ask you to buy or ask you to sell. But in the meantime, if you think the company is a good company, you want to invest, but please also do further study. Try to understand what are the key risks, what are the things that we might not even cover here, because this is just a 1 hour sharing session. And then yeah, if the price is right and the company is your cup of tea, you can invest just on your own circumstances. So I think this company, if you are not familiar now, you are looking at their first segment only. So this company has a lot of business segments. The first one, straightforward, is marine products manufacturing. So basically, for Chinese, sometimes we do like to have hot pot steamboat at home, and every time we want to do steamboat, you definitely buy a lot of these fish ball, this kind of different kinds of fish nuggets, mainly sea coming from fish or coming from other seafood. So they will make these different kinds of marine products. Your fish steak, your crab steak, your fish tofu. So all of these QL, KL Berhad, they actually have a few brands that make this kind of product. So you have Mushroom brand, you have Suvia. So I also see that a few brands are more tailored to the Muslim community. And also you have also Figo and Ikas and also Ocean Ria. And very straightforward, they'll tell you that this is one of their core businesses. They are fish meal manufacturer and producer of surimi products. And chilled surimi, the capacity as of the latest is around 25,000 metric tons, and frozen surimi, the capacity is at 35,000 metric tons. And surprisingly, I can tell you guys, you don't only find their products in Malaysia, but they also export to countries in North and South America as well. So this is the power when you have a product that can, get shipped around the world and you do business globally. So second one is integrated livestock farming. In very simple terms, they are in the business of also having egg farm and also chicken farm. Chubeng, you want to take this one?
Yeah, I think what they have inside this is they are practicing an end-to-end model, meaning from chicken down to the production of egg. They cover all of it, and then this is some of the statistics. They're producing 5.7 million eggs per year as of 2019. And then they not only focusing in Malaysia market, but they also export to Indonesia and also Vietnam. And then if you hear us from the first segment, they export to North and South America. Means even though different segment, but all of these segments have a very diversified market. I think it's quite a good sign from a business perspective.
Yeah, definitely.
Yeah.
So I think when you think that the company does fish meal and surimi products, and then they're also in farming of poultry and also egg. So I think also very very complete already, right? You don't just have a business in where you have a sea protein coming from sea, which is your seafood, and you also have protein that we can get from the land, which is your chicken. And then suddenly I tell you, hey, I still have one more business segment, which is the palm oil activities. So the palm oil activities under QL Resources Berhad, if you guys know, palm oil is also a very long value stream. So you have a plantation, the ones who actually plant the palm tree, and then once they harvest, they'll get this we call it fresh fruit branch. So they get this fresh fruit branch to a palm oil milling facilities, and then you'll just squeeze the oil out. But the squeeze the oil out, there are a lot of impurities inside the oil. So only the oil, once freshly squeezed, then we'll send it to a refinery to refine the oil to become the cooking oil that we can buy on the supermarket. So it's quite a long value stream, and QL's palm oil activities is actually to the mid to upstream. Basically, they own a little bit of palm oil plantation, and then they also have a mill to actually squeeze out the fresh fruit bunch oil. And so you see, it's just 16,000 hectares of oil palm plantation. Just to give you a sign on how big the biggest one, if not mistaken, Sime Darby have roughly around 30,000+. So 2 times more of what QL have, if my numbers with my memory also serve me well. And majority of their palm plantation is in East Malaysia and Kalimantan in Indonesia. And usually these mills will be just situated very closely to the palm oil plantation, because if you don't squeeze out the oil in a shortest time frame as possible, the fresh fruit bunch should go bad very easily. So usually the mills are situated quite closely to the plantation. And also to complement with their palm oil activities business, they also have a 44% stake in the largest biomass boiler manufacturer, which is also a listed company in Malaysia called Boiler Mac Berhad. So yeah, and that was just a QL maybe 5 to 10 years ago. It was already a very complete business. They have multiple verticals, but suddenly, just I think maybe just less than 5 years ago, they started a new business vertical, and this one I think most of us are very familiar with. Maybe Junbei, you want to enlighten everyone?
Yeah, I think Family Mart is not originally founded in Malaysia lah. I think it's quite popular in China or also Taiwan, but I'm not sure which is the origin, as in where it
I
actually
think
come from.
I think Japan.
Yeah, Japan, Taiwan, and China, they got a lot of branch. But then when they come into Malaysia, QL is the one that distribute, as in to plan out the rollout of the store. And then as of 31st of March 2020, they are quite aggressive. Within 2-3 years, right, they already managed to open up 184 stores. If you read the annual report 1 year ago, probably it's only at 90. So it's quite fast. And then they promised to hit the store number at 300 by 2022. So all this is quite impressive, meaning they are really quite gung-ho and have the momentum to actually go into convenience store this kind of business. Also, one of the keynote is when you see like suddenly they sell marine products and then they go into eats, then palm oil, then convenience store. It's not related, but actually Family Mart is a very good extension to QL company business model because they have all the upstream being sorted out. So a lot of food that you see here is a product that produced by them, and then they export it out to South America or North America and other country. But then now they also consuming themselves. So one of the unfair advantage that Family Mart can have if compared to My News or even 7-Eleven, I think it's the raw material cost. That's why you see they are very into raw food preparation. If you go into other place, maybe it's just bread, the bread with cream, a lot of pre-packed cold food. But this guy can really give you the raw and fresh food. So this is the unfair advantage that they are into, and then this can allow them to go quite far. One of the good news is also he'll be very aggressive expansion, new model, new supply chain, new value chain, all those things. But they managed to break even, I think, within 2 years plus. So it's quite impressive. When within 2 years plus break even, meaning including the spending of the renovation, all those things, is quite impressive. So this is what is happening in Family Mart. I think this also drive the price of QL to next level. If you observe the movement of the stock price.
So, when we talk about a business or company that has so many business, naturally, to study such companies, you definitely have to do additional homework. Basically, for example, like QL, you just not only see the overall picture. Let's say, for example, I know some of us, we don't have time whenever companies, they just, announce their results. You just take a very quick look only. Our revenue got grow or net profit you got grow, then that's it. And for you, maybe it's already enough because got grow got grow means good thing lah. But to be very honest with you, if you really want to put in more money or be more confident when you invest your money into your hard-earned money into your investments or pick the right company, you always have to go deeper and deeper. So for a company like QL, which has so many business segments, you have to go and scrutinize them. Okay, you say you have marine products manufacturing. Okay, I want to know just marine products. How much are you growing? Okay, you say you have integrated layer farming business also. So I also want to know that business itself grow how much. And you have palm oil. I also want to know that one grow how much. So from there, we will only pick up some kind of symptoms. Let's say, for example, one business segment not going to do well, have been flat. Then from there we will know, okay, this is the potential risk, potential downfall, pitfall that the company, that can really cost the company. Maybe not now, maybe could be 3 or 5 years down the road. This one you never know. But if you scrutinize, then at least you have some preparation, or you think of better ways to actually mitigate this kind of situation. So we go straight into the growth of each business. So you can see here, POA stands for the palm oil activities, has been relatively flat. So from 2016 is around 433 million, 512 million, 455, 464, 451. Yeah, so along the years it has go up and down, and within 5 years there is no significant growth. So I would say that palm oil activities might not be a key element for QL to grow on top of it. So let's go to the next one, marine products manufacturing. So this is the one where they make the surimi, they make the fish cake, they make the crab stick. Okay, the one in the red color. So we see 914 million in 2016, go up to 989, go up to 1076, go up to 1148, and then go up to 1196. So from here, I know marine products manufacturing could be one of the important business segment that would determine whether QL Resources Berhad can continue to grow or not. Will people continue to buy marine products for steamboat? Will people continue to go to Family Mart to buy their steamboat materials and eat it when they go around the shopping mall? If the answer is yes, then of course this business segment will continue to grow. And last but not least, you have your ILF. Basically, this is the business where they rear chicken, sell chicken meat, and then eggs. So will you continue to eat eggs? Will you suddenly stop eating eggs? And will more and more people also maintain their eggs in their diet? So if that is a yes, you can also see that it has also been growing from 1.46 billion up to 2.4 billion in the span of 5 years. So as a total, you can see majority contributing by the MPM and ILF, the revenue or total assets has been going up. And this is where you also know that where the company is actually investing their money in. So they're investing heavily into the MPM and ILF segment, and that causes the overall assets to go. And then that was the total assets and the tangible assets as well, also contributed mainly by the MPM and the ILF segments as well. So next we go to the shareholders' equity and the earnings per share. Naturally, if the company has a very sustainable and very tangible growth strategy, the top line will grow, your revenue will grow, your net profit will grow, and then your earnings per share will grow. And if the company shrewdly and smartly reinvest this time the earnings of their business back into the business, you will also see the shareholders' equity go higher and higher, because a portion of it will definitely be captured under retained earnings, which is earnings that the company has earned, never pay out as dividend, but continue to maybe keep as cash or to reinvest into the business. So we reached the revenue part. Maybe I'll let JuMing take. So what can we see from here in terms of QL's revenue and also the profit?
Yeah, I think from here we point out a few key highlights. So I mean from the chart itself is steadily growing up. I think when we zoom into it, the key driving factor is actually from the marine products manufacturing. They call it MPM, which is the first business segment that we have shared. So this is the key reason that supported the growth of the company, because palm oil, all those things in the last year is not performing really, really well. And then, of course, later we'll give you an outlook of how all the different business segments are going to perform in the future. But it's just an opinion for you guys to take it as a reference. And then, so all this point is always surrounding with the marine product, because it also come with some better cycle in terms of harvest, so that they can manage to get a lot of fish during that time, and then able to manage the cost very, very well. And then lastly is actually referring to the weakened ringgit. that help to drive the export business of Malaysia. So all this is contributed to one business segment only, because the rest they're trying to pick up, and then some is actually not doing so well. So I think we can go to the next slide. Do you have
So
anything to
yeah, I
share?
think if you look here, if you just look here, basically, the turnover has been increasing non-stop ever since for the past 5 years. And even if you just look back for the past 10 years, this is a company that every year definitely they will be able to break new high in terms of the revenue they record. And if you really know the management, Dr. Chia, he also has his own humble beginnings. So he started off as a lecturer only. That's why he's a doctor, because he got the PhD in, if not mistaken, mathematics, and he taught mathematics in a university. Then after that only, he started to set up a small business, trading fish meal with his brothers. And slowly, the company got bigger and bigger. And then they decided to also reinvest and make the company bigger as well. And this is where you can see that good management actually bring the company to higher level. Company has non-stop growth. I think even during COVID, if you look back the latest few quarters, company still has been doing very well in terms of their quarterly results, and profit also keep on growing. Over on and off here, you might see the profit maybe got impacted a bit, but it always will be able to break a new high. For example, you see here, 2017, they got 260 million, and then 2018, yep, it dropped 20 million. Maybe had their own reasons. Maybe they had to spend more money onto some maintenance or upgrade progress. And then come 2019, then you went back up to 272 million. And as of 2020, it breached the 300 million mark. So it's not really that correct to just dismiss the company just because one year they reported a lower profit. You always have to understand what did the company do. Maybe it was the extra few 100 million or few 20 plus million the company spent to ensure that the coming years company will be running more efficiently their operations as well. And you can see that if the company really put in money to reinvest in their business, the assets will always grow from 2.8 billion all the way up to 4 billion. So the company has grown almost 2 times, roughly 2 times, or close to 2 times in the span of just 5 years. And of course, being such a competitive business, they are not just the only marine product manufacturer. They are also not the only layer farm operator as well. So to be able to get a sustainable net profit around 8%, 7%, yeah, I would really give them the credit, because it's not easy to maintain your company as profitable in such a strong competitive business. You might also be familiar that there are also other listed companies in Malaysia who are in a similar business model as QL Resources Berhad. And yeah, I would say that due to that very fact, it just is a straightforward good company with a good business model. But this kind of company, whenever everyone can see so clearly it's good, usually the price will be very expensive. You don't want to talk about the valuation. Later, we will go deeper on what is the valuation of this company. But let us just see how diversified is their business. They have so many businesses, how diversified they are, and which country is the one that play the biggest role in QL's revenue. Chun Beng, you want to take this one?
Yeah, so I think we can have a look into different country, and also by different product. Because I think we have shared already the one that is in the livestock farming. It's mainly from Malaysia, Indonesia, and also Vietnam. Of course, majority still come from the Malaysia side. So you think this business is only in ASEAN country? No. And then if you go into the first column, I think this is one of the major highlight, which is the marine products manufacturing. they have quite significant number in other countries. We have compiled it into other country because majority of it come from different country in South and North America, a lot of them. So I think all this is quite a positive sign. And then for palm oil, then this is the only one, they only focus in Malaysia and Indonesia, which is also right because in ASEAN, I think beside Malaysia, Indonesia should be the biggest market. And then they have some share of market into Indonesia is a good sign. I mean, we are just not only focusing in Malaysia only. So all this is a good thing for the outlook of this company. And then you will ask lah, then what is the fourth one? The convenience store. Yeah, convenience store now is all in Malaysia. And then it's parked under integrated livestock farming for now. Right? So in the next annual report, we were expecting it will break down into the separate section already. But now I think it's too small to even call put into this number. That's why they lump it into the third category.
So I think one of the key things that the management or the executives, they also know that being such a big company with multiple business segments, it is always important to go into each segment in detail. Basically, they are very kind to just tell you, okay, I got 2 marine products, and what is the latest progress, what are the risks, what are the key catalysts for this particular business. They will also let you know. You just have to be hardworking and curious to really read about it. So we just share it here. Basically, for marine products manufacturing, there's risk because when you make marine products, your fish cake, your crab stick, you need to use fish. You don't use other kind of materials. And if you want to get fish, you need to catch the fish from the ocean. And if you have friends or if you know someone who have worked in the who are in the fishing business, the key kind, not the one with the fishing rod, but the one going to deep sea and fish trawling, you will know that fishing is very dependent on a lot of factors, weather, seasons as well, because sometimes the fish just don't bite in a particular period of time. And uncertainty will definitely play a huge risk to the marine products manufacturing. If you cannot catch fish, then definitely there will be no fish to make marine products. And operating from a country in Malaysia, selling overseas internationally, the ringgit and the USD exchange will definitely play also a key part in the profit and loss of QL Resources. And then just now we also talk about this is a company, where they have boats, fleets of boats which go for deep fishing to catch fish and then bring back and then reprocess it, right? So your boat also need to pump petrol to sail from the harbor into the deep sea section and then come back. So oil is also a cost for this company, and crude oil, if prices go against it, it will also impact the cost structure or the expense of the company. And as we also know, currently we are facing a pandemic. It's not over yet. Definitely there will be additional SOPs to ensure the health safety of not only the key personnel going out to get the raw materials, but also the people who are working inside QL Resources manufacturing facilities as well, and also the ones working at a farm. So, but overall, they tend to give out that this segment is a mixed positive. That means that, yeah, there are risk factors, but it will not be that serious. And they are expecting the overall marine product manufacturing business to be steadily giving key growth contribution to the overall company. Next one will be the livestock. So livestock, they said that under COVID-19, it really affects the productivity and the consumption patterns of humans. Maybe we don't get to visit KFC or the other fried chicken joints that frequently during the lockdown period. And if we don't go to eat KFC out that often, then of course KFC or other kind of fried chicken outlets will tend to order less chicken or raw material from the chicken farm, like QR resources. So in this kind of situation, you have oversupply, and also for poultry and also other livestock as well, there is also a risk of diseases. And overall, due to the current economic situation and the macroeconomic progress, this segment is a little bit negative at the moment. So I'll let Chun Bing take over the palm oil activities and also the convenience store.
Yeah, so I think for palm oil, of course, it's relatively stagnant if compared to the other segment, especially the marine products and also the convenience store. But then there are a few key points to take note is they are expecting that actually the fresh fruit bunch to increase marginally. But then the key thing that is showing a good sign is actually the CPO, or the crude palm oil price, is on the uptrend. And then a lot of different analysts also quite positive on it, which mean it create the chance of finally turn this entire segment from a loss into profit. So you'll be surprised. This one is quite big, but then they're still doing it at loss, while convenience store expand aggressively over the last 2 years, but then they already managed to achieve the break even. So this gives you the contrast, but of course this is what they are already in. And then the CPO also suffer from a huge price fluctuation in the past few years. So I think all this contributed to the loss making. But then eventually, if everything stabilized, and the CPO definitely will go up, it's also a good trend for them. So the only key issue is like what Juban has mentioned on the integrated livestock is the only one that may pull them back a little bit. Then the next one is the convenience store change. I don't think I will go into very details. A lot of people are very familiar, and they also understand what is the key reason that make them special or let them have the unfair advantage. So the key reason is they are the one who supply some of the raw material as well. So imagine you produce the same thing, you're supposed to sell it as some margin to someone else to produce into the end product. So the margin is actually giving back to feeding the convenience store that you have, and then indirectly you are moving your business from a B to B focus, which means usually the margin can be very, very low because a lot of negotiation going on, a lot of relationship being tapered out, and need to sort out a lot of things. But if you go to B to C, you have the chance to control the price. And the best part is you control the price, and the raw material is very, very low price because it's in-house product. So all of this is giving a very positive sign for QL in the coming years. Of course, the share price is already somewhat reflected, but then you should see where are them with Family Mart right now. They just managed to break even. The future growth potential is still there. But the only key thing is whether the new challenges come from my news. Is it a real thing or not? If you guys follow news, right? My news is working with a very famous Korean retail chain as well. They plan to bring it into Malaysia. But of course, personally, when I went to Korea, I didn't really notice that one. Or I'm busy eating kimchi. So I'm not sure. But from the news coverage, all those things, it's supposed to be one of the biggest convenient food chain in Korea. And then we shall see what is the impact. Can kimchi win the Japanese food? We don't know. But this is some interesting challenge bringing in by my news for Family Mart perspective.
So just now we saw that actually for the past 5 years the assets has been going up. I think something is wrong with Morningstar. They didn't manage to capture the 2016 data. But one good thing we also want to show you guys is that the liabilities and the total debt is relatively flat. You can see that for the past two years here and plus the Q1 2021, you see that the debt is just 0.92 up to 1.44, whereas you look at the total assets, it has grown from 3.18 billion to 4.3. So you can say that this company somehow doesn't really need that much debt to pivot and to continue to grow their business. And if you look at, of course, if debt and liabilities stay flat, the portion that increases is going to be the equity part. So for 1.84, it went up to 2.01, and also as of Q1 2021, it's at 2.23. So this is a company that grows in terms of reinvesting the shareholders' retained earnings. Basically, a company earns money already, and then if you guys really know QL Resources Berhad, they really don't pay very generous dividends. So this is a company that really don't pay a lot of dividends, but they will take your money, the hard-earned profit from the company, and then they just grow the company. So this is another way a company can give back to the shareholder. Company can pay dividends from their retained earnings to shareholders as a reward. Companies can take the retained earnings, grow the company, make the company bigger and stronger, and then share price will go up, and shareholders will also benefit from the higher share price. And last but not least, companies can also take the retained earnings and do share buybacks from the market. And that is also an action that will trigger share price appreciation. So these are the three ways, and QL Resources is very, very into reinvesting into the business. And if you guys have followed this company, the share price have been going higher and higher and higher and higher. Like there's no full stop to it. And you can see the cash also is not a lot. And I think from my opinion, doesn't mean that the more cash you have in your balance sheet, the safer you are, or it looks good. Because at the end of the day, cash sitting inside an account without utilization is just a waste of opportunity. Just like if you have 1 million inside a bank account, you never invest that cash, you never spend it, it just sits in your account, it just doesn't going to make any good. It just looks good on paper only. So personally, if the company can manage their debt well, they can even grow the business better. Yeah, I don't really mind if the cash portion is at the lower level, and but the company can still manage to get in operating cash flow from their recurring business. So very straightforward. You can see here operating cash flow. Once the company reinvest or grow the business, the operating cash flow is increasing, and it's increasing significantly. I think you can see here trailing 12 months is at 0.63, and it's definitely almost 1 time more than the numbers you see in 2018. Investing wise, every year, every now and then, this company is a company that doesn't do investing or capex expansion one shot. They'll do it every year. They'll allocate a few amount, and they'll continue to improve existing infrastructure. They will continue to build new farms. They'll continue to increase their so-called fishing fleets. So you definitely will see every year there is some investing portion going on. And financing is just basically how they play around with the cash flow. If suddenly this month they need to borrow money to just pay off some debts or whatsoever, then they can just draw down a little bit of debt. And they also pay a little bit of dividends. So that also potentially contribute to the negative outflow of cash. But overall, you can see it's pretty much stable. Of course, 2018, 2019, a little bit negative free cash flow. I wouldn't be too scrutinizing on that, but 2020 is as positive. Trailing 12 months it's also as positive, and it's also slowly going on an uptrend. So it's very reassuring. So this kind of business, I would say that if it's continued to grow, generally this would be the pattern you will be seeing every year. It's going to be boring, but nevertheless, boring investments sometimes are good investments because they tend to have very little chances of going wrong. So just now we also briefly mentioned about the shareholder or the founder. You can see his name there. Actually, he's a doctor, so we better be respectful. We call him Dr. Chia Songkun, the founder. So indirectly, he owns the major part of it. And rest of his, you can see that a lot of them, they share the same surname. So it's a very family orientated business. And of course, Dr. Chia's son and also his nephew, I think, will be the young blood that would eventually take over from the older generation. So in a way, I would say, in terms of handing over the reins to continue the legacy of this company, is more or less there lah. Anything you want to add on, Chubing?
No, I think it's quite straightforward for this. Maybe you can go to the next slide. Also have other information of substantial shareholder. You might be confused with different name up there lah. So those name is just behind them is still coming from the same guy. It's just this is the entity that officially owning the share of the of this stock. And then of course you can see some of the fund house is also in place. You can see the EPF. EPF, and then the rest is all about the nominees. Basically it's all of them, or most of the directors and founders.
So yeah, maybe I'll let Chun Bing continue on the prospects of the company.
Yes, so I think moving forwards, especially after this post or in progress kind of COVID situation happening in Malaysia, and also the worldwide, it definitely will be a hit back to QL. But then this is some of the prospect that can help to balance out the impact. So personally, I'm quite bullish with it, because I think out of so many convenience store, this is the convenience store I'm going, even though I know it's quite expensive. They can sell something that is not available in Malaysia, that you can get it very low price, let's say places in Taiwan or China. They mark up so much, but you miss the taste, you just buy for it lah. Personally, I like the ice cream there. I always go there to grab the ice cream, and the entire environment in terms of user experience is also quite top notch. If you compare to 7-Eleven or My News, I don't know why. Maybe the color green and blue, and the lighting is just so bright. A lot of things is clean. The packaging is white color. It just makes these things very, very clean, and it bring out the impression of fresh. So all this is positive to attract people come in. So when people come in, the thing that Family Mart can make out of it is a lot of things is exclusive, they can mark up. Secondly is a lot of raw material is in-house, so the margin is high. So all this is really a positive stream of revenue go to them lah. But then of course now they only manage to break even, and then stock price is so always forward looking. That's why the number has been going up even after COVID. There's a huge drop, and then they have slowly rebounds. Secondly, it's on the weakened ringgit, especially COVID is continuing to be in the high. I would say the third wave is still active. I think most importantly, also we should point out the political scene also not so stable, which mean all these things will create an impact on the recovery of economy in Malaysia. So the weakened ringgit will stay there. Don't try to justify the weakened ringgit with the movement of USD, because USD also get weakened over the time. I mean, for the next few years, probably they'll get weaker, and eventually you can see 1 to 3. These are personal thinking, but then you should compare with other countries, for example, China's RMB or any other thing to justify whether this is really a weakened ringgit. Don't compare with Malaysia. With USD, you think, it's recovering. No, this is not the true indicator. So this weakened ringgit definitely will help them because a lot of their business is export. And the best part is it won't impact them in Family Mart because a lot of raw materials is in-house. And lastly, is on the uptrend of the CPO, which is the crude palm oil price. I think this one we have covered it already. All this is a positive thing that QL can bring to the table.
Yep. So yeah, as always, good business is always not going to be straightforward, smooth sailing. Definitely, there will be risk, and yeah, here are a few risks that we think could actually derail or delay the share price or prospects of QL resources. So we talk about actually, if you really think back, QL resources Berhad, the business model is not really exclusive. Meaning to say, if you have the money, you want to also do something like QL, you can actually. Basically, you just take the money, you go and buy ships, and then you go and catch fish from the sea, and then you have money, you build the uh, marine produce factory, and then you can also make the similar surimi, or maybe you can even make it better than QL resources Berhad. And there are a lot of other surimi brands out there. It's not just we preferably like or just buy QL's products. There are also other brands out there that are not under QL resources, and some of their brands, the products are even better. So in this kind of situation, and also not on just the marine products, you also have your eggs and your poultry. That one, case to case. Some people they don't really have a brand loyalty to it. I don't know, Chun Ming, do you typically buy the same brands of eggs every time you go to the supermarket? So yeah, for you, there's no brand loyalty. If today I always buy QL, but today QL resources eggs is finished, I will just buy another brand. And if the other brand is good, maybe I will just totally switch towards them. So these are business segments that do not have really strong moat. Basically, they leverage on their operative leverage and also the economies of scale. So, and it's also a lot of it are also commodities like palm oil. So, and when you work inside this kind of business, and there is a oversupply, definitely the price of it, the selling price will go down, and that would eventually impact the revenue and also the profit of a company like QL Resources Berhad. And of course, if supplies is scarce, then the profit or the revenue will also go higher, because people will tend to sell at a higher price because demand and supply. Second, of course, is COVID-19. We are not out of the woods yet, especially in Malaysia. These few days is a little bit worrying. The daily cases is consistently around 800 plus. So people will tend to stay indoors more, and retail might take another small hit because of the current CMCO predicament. And yeah, we also talked that when you are in the livestock business, one virus, one pandemic can kill and impact a lot of things. I think we also previously have the flu swine, we also have the mad cow disease, we also have the the bird flu. So that one was the kind of incident where once kena, you'll have to really slaughter and have, kill all your chickens in the farm, so that you don't let the virus spread, and you have to bring out a new batch of chicken and ensure that they are not contaminated or get infected by the disease. And last but not least, you can see there the CU is actually the Korean brand convenience store that mynews is partnering to roll out in Malaysia. How good it's going to be, we are not sure, but yeah, eventually when it rolls out, definitely I think Chun Ming would pay a visit and give a few report on how good or potentially threat CU and mynews can provide to QL Resources Family Mart. So before we go to the question segments that you guys may have posted, we just run through the valuation. As mentioned, this is not a company that is very cheap. You can see straight away the PE ratio is at 63, around the same level as Nestle Malaysia Berhad. So not cheap, expensive for even a food and beverage company like QL. But the good thing that you can really know about this company is that it's still growing. It's still delivering higher profits if you look at it from a 2-3 years or 5 years kind of perspective. ROE stable as always at around 7 to 8%. And yeah, dividend is there's still dividend, but it's not that sexy. And maybe because of the share price currently trading at 63 times PE, and you take the dividend and you just divide it, yeah, it's at 0.72%. So this is not a company you want to invest just solely for the dividends, but mainly for the potential upside if you believe the company can continue to grow. But yeah, I don't know what you think. Chun Bing, do you think PE or value for QL today is expensive, or do you think it is justified just because there's still a unknown factor or the prospects from the convenience smart business?
I mean, from the figure itself, it looked to me a little bit high, but then when we jump into deeper, there's a couple of positive sign of different business segment which will bring this, as in it can justify the price. But I would say in near terms, it won't be suddenly go down to 40 unless there's something big happen. So if you are believer of the future potential of Family Mart or even the palm oil that they managed to turn loss into positive, and then the CPO price is on the uptrend, I think it's good to monitor now, because now politically unstable in Malaysia and a lot of COVID cases is causing the stock market to be only focusing in certain growing stock, which means people forget about all this good stock. It's also a good chance for us to monitor. And then if the price suddenly go down because of shareholder cannot tahan, they cash out, then it's a time for us to enter. I mean, it's a little bit high, but then the potential is definitely there.
So yeah, I think I do agree with you. It's a good company. Valuation is high. Maybe there's also no urgency to straight away want to buy if you think this company is really good. I mean, there are still plenty of things or opportunities. As we know right now, we need to really know how severe the COVID situation in Malaysia is, because if for the coming days, if it goes worse, then definitely the government might take up more stringent measures, and usually in such situations, the share price would of the overall market will get impacted as well. Then also we also have the US presidential election. That one could potentially also cause a huge fluctuation in the share market as well. So what I can say is you hold on to your bullets, hold on to your capital, but don't sell everything and say, okay lah, I everything cash out first, and then when a huge drop come, only I redeploy my money. We never know. Maybe COVID case will turn better. Maybe election is not as volatile as we think. So, but if it's volatile, at least we have the money to take advantage. So I think that's about it. We will go to your questions to see. I think Darren and Mr. Wee are quite active today. Hi. I hope you guys enjoy the company. QI is a very good company, but it's too late to chase it now. Queen, I think the question we mentioned before, do you still believe the company can grow or not? Will people suddenly stop eating eggs? Will people suddenly boycott QL's product? Will you stop going to Family Mart to buy their soft serve ice cream? I don't know about you. Do you think QL's soft serve ice cream is better than McDonald's?
Good question. but I personally buy the what's the name of Figo or Figo, something like that. I think that the one is quite
Figo,
nice.
yeah.
when I do my steamboat for my housewarming with my relative, I like that. So you're asking sausage, is it, or what?
Soft serve ice cream. McDonald's
Um,
versus Family Mart.
I personally it depends on my both. I will go for it lah, to be honest. But then of course, if you talk about the from taste perspective or delicious perspective, of course the Family Mart is better, but it's very expensive lah. Uh, our dear friend McDonald last time has been charging us 1 ringgit. I think now increased to 1 ringgit 50 cent already.
Yep, yep.
And it's still quite low lah. So the only key takeaway that I have with McDonald and KFC, all these fast food chains, I believe they earn so much back then when we were small. The same McChicken price never increased or even dropped price lately. So I don't know what is the margin they are having. I think 10 or 20 years ago when I was a kid. So if Family Mart is into something like this, right? They charge expensive and you still go for it because you like it. So this is a good sign. It's like last time, I think can go to McDonald's. It's like I need to get good result. Only can ask my mom to bring me to take the ice cream or whatnot. So if the same thing is something happening for my Family Mart compared to the other change, it's a very good sign.
So yeah, I think yes, the price is expensive right now, but if you really believe the business can continue to grow, you really believe the Chia family, Dr. Chia can continue to grow the business, then you'll be surprised that this is a price today. This is a shared company. You think today 9 ringgit is expensive, but if you close your eyes and then 5 years pass, you open your eyes, then suddenly the company maybe becomes 12 ringgit or 14 ringgit. This is a company that's not in having debt problems. They need to grow using borrowings. They grow using shareholders' money, retain earning. So in no way they will need to do rights issue. There will no chances for share price dilution. It's just that maybe you might need more time for the company to grow moving forward because the company is already bigger compared to previously. So CPO price very good, right? I think CPO price or commodities will definitely get impacted or catalyst when currency is weak lah. So as of mid-term to long-term, yeah, I think CPO price has been rebounding from the bottom year compared to last year. Think of the value, not the price. If PE is justifiable, then why not? Or you see, I think we can invite Mr. V to join us as a panelist. Really, he can give good sound advice when it comes to high value companies but still growth potential. So Darren saying that yeah, but not their core business. Correct. Palm is still not their core business. Just that there will be positive cushion if the prices is favorable. Hi, mykayaplus. Are they going to separate a segment for the retail Mart chain soon, or is it not significant enough yet? I think for 2020, 2021 fiscal year 2021, definitely they said that they will separate it out, and from there on you might also see it's already positive in terms of the profit and loss. So I think 2021. We are looking forward to see the separated one, and from there it will be more interesting. From there you will definitely see how is the profit margin, and maybe after seeing that you will have more confidence into assuming that Family Mart will be a higher catalyst to the company's growth moving forward lah. So Darren is saying that company not keep split share. What is their actual? Wow, this is very good price. Good. But if you look at Google Finance, right? Google Finance basically they already show you the share price adjusted with all the splits already. So for example, if I go to Google, I type QL share price, then it automatically will show me the graph, and then they will show you. You click the max. Let me show you the screen. I think I can show you guys the screen. Share screen, application window. Stream. Okay, yeah, let's. So you guys can see, right? Split a lot of times. I've split previously a few times already. So you look back then, the previous longest history, 2016, 2006 was just 27 cents. I click here and then I draw a line up till today. So you can see the price from 20 plus cent has gone up six ringgit. Oh, it's too small. And it's gone up around 2,200 times already. Let me make it bigger. Yeah. So yeah, 26 cents all the way to here. So 2288%. So it's a very scary company in terms of growth and in terms of the capital gains since the company got listed. Current PE seems fair price, a good company value. I think valuation is very subjective. Some people think it's expensive. You might think it's fair price. Personally, for me personally, I think it's fair price as well. I think for the past few years, if you have been following QL, they never drop the PE that they are trading at. Never drop very low. It never went down to 20. It never went down to 30. It also never went down to 40. So
I think during COVID time, during COVID time, maybe got chance, the few days.
Yeah. And maybe during COVID time, you will want to say, wow, maybe we'll go lower. Then yeah, that is the time where we just missed the boat to buy QL at PE 30 or 40 times. So yeah, you can say it's a fair value at today's price. You can also maybe think that what if I am not patient, that or I don't think that it will go down, I want to invest my first tranche. Yeah, I would say definitely even if you invest in a company at today's price, you will not see 30% drop capital loss suddenly. Because this is a good company, this is a company with good management and has already grown so much. You will not be the one worrying that the company will someday limit down compared to those who play with the growing stocks. Yeah. Market conditions, market sentiments go up and down. Yeah, but you will see maybe -5%, -10% floating loss. And economic condition goes back well, yeah, this company will continue to shoot back up. Yeah, I agree. Financial size is considered quite significant, but it just depends on whether they want to put in more money into their foundation business. Currently, I don't see so. I think they are still very focused in their marine products and also integrated layer farming business. But yeah, I mean, if CPO prices continue to shoot through the roof, definitely company wants to expand to the palm oil, buy more land and do more plantation is easier because they already have the existing skill force and task force to run the current plantation already. So yeah, I think Mr. V wants to also share some experience. He said he went to Family Mart in Icon City. Family Mart food is actually not cheap. Yep, I think comparatively, the most expensive if you compare against 7-Eleven, compare against My News. But the people there just snatch the food without looking at the price. This shows the Family Mart branding is quite good. I think, surprisingly, Family Mart's image, the Malaysia version one, is quite similar to the one in Taiwan, similar to the one in Japan. Whereas if you go to Taiwan 7-Eleven and you come back to Malaysia 7-Eleven, you'll notice such a huge difference in the 7-Eleven in Taiwan and versus Malaysia. So they just managed to ensure the quality, the brand is there for the Malaysia's Family Mart. Is there any other competitor with QL in marine products? Yeah, Luis, there is. There are a lot of Sendirian Berhad companies. Basically, if you go to the frozen segment and then if you just take a look at some brands that are not produced by QL resources, then you'll see there are a lot of Sendirian Berhad, small companies, or maybe some even in the fishing village, those fishermen that have eventually grow their business. They also went into the surimi fish meal kind of production. So there are plenty of competitors out there. Darren is also saying, in future, will companies split out Family Mart and IPO like 7-Eleven Malaysia Holding Berhad? This is a tough one. If I were Dr. Chia, what would I do? I think if I were Dr. Chia, I will not do it.
No, but I think if you think of it this way, the only reason he wanted to split out is to raise more fund or something like this, or it's quite complicated that you need to manage too many parties. But the beauty of Family Mart within QL Resources is they are able to bring in the upstream raw material, go to the end product, and then being sold to all the retail chains. And then, which means they can manage where is the cost center, and then they can actually show the result as per what they like. I mean, of course, all those things we don't know, but if everything within the same group, it gives them more flexibility to actually help each other when I talk about the entire company. If not, if a separate company, let's say this year family is doing so bad because for a great competitor, they want to drop price, then imagine this campaign is causing a bad image or lose confidence of the shareholder, and then shareholder just sell the stock and then the stock price drop. All these things is out of control, but all within the company, and then of course they can do some left pocket, right pocket kind of arrangement to make it growing from a company as a whole. But of course, this is just my personal opinion. I don't think it will stay.
Yep. I think I think if you really I think what Chun Bing mentioned just now is a very good point. Why company want to IPO is mainly because they want to grow, they want to raise funds from the public, and they want to pay down their debt because the debt is too high. They want to take shareholder money and then IPO and then lower down the debt. But if you really understand or read through news articles about QL Resources boss, he is a very down-to-earth person. He is a very he's not the kind of flamboyant boss, talk a lot, talk very big, promise a lot of big things when it comes to interviews or giving press conferences. He's a very he dares to promise that his company will continue to grow, but he will not over promise and say that company definitely will go how much. His only bragging is by hook or by crook, I will make sure QL Resources always grow my revenue. And he really walks the talk. He's not someone who is greedy. He's not someone who, if he wants to IPO so many his business separately, he would have IPO all of them separately. The marine products, one company. The ILF, integrated layer farming, also one company. The palm oil, also one company. And there are a lot of companies in Malaysia where we know the bosses, they IPO all their companies. They split their businesses and then they IPO all of them. And if you look at that kind of company, the share price will not fly one because it's too risky already straight away to just invest in a company that has one business vertical only and so competitive. So if Dr. Chia continues to be a good man, a good image that he's portraying, I just think that he will not IPO Family Mart separately just based on that few reasons lah. So a very good question, and also made me think quite hard, and I hope he doesn't do it, and that would be a very positive thing lah. QL has just done BI, and the share price is on beating for a few days. I just saw the share price came down quite a bit, with P63 getting more and more attractive for me. Technical wise, the selling pressure is still there. 5 ringgit 80 cents to 6 ringgit is a good buy region. Anything lower will be bonus. I think if it goes down to 5+, it really would make me a little bit, lost. Whether should I invest my first tranche or not? And we don't know because market is definitely going to be volatile. But I think, just personally, I think valuation-wise, we share the same appetite. And this is a good company to actually get a bit of exposure. And you cannot be too greedy to aim for what PE 20 and PE 30 lah. So I think Darren also just reiterated, important is holding power. Yeah, if you don't borrow money and invest, if quite even more true during this kind of period where jobs could be at risk. The job market is also unexpected and also very volatile. Companies may, retrench people every now and then. I think if you follow the news, Cathay, the airlines have just stopped operating after operating for so long. So this kind of thing can happen. Most importantly, invest with your own money. Don't take unnecessary leverage and borrowings. Want to hold at a low price, if not, will stay in condo. But this kind of company, even if you stay condo, it's also just little while. Trust me, just little while only. It won't stay for 5 years. It will just be at most 1 year, 2 years. So Darren, I think from your comments, you are implying that you are invested in QL. But yeah, I would say not to worry. Hopefully, if you go through the whole discussion, sharing with us, you know that this company will not run into liquidity problem, will not suddenly don't have business to do. Even if CMCO, no tourism, also they still have business. So keep a cool head and keep a calm head. This is a resilient business. I'll be on. I share my analysis on StockBit. Okay. Personally, we are not on StockBit, but when we go on that, definitely we will definitely take a look. Are there any other public listed company doing similar MPM? Let me check one information. I think no. MPM wise, there is no other companies. There are a lot of Sendirian Berhad, but not listed companies. So I thought CCK is also in the MPM, but apparently no. So they are in CCK is one of the companies in the poultry business, but they are not in MPM. So yeah, but they do have a fresh mart in the East Malaysia region. So that's also another good diversification from the original poultry business. All right. Looks like you guys today very active, but this is new norm for the of BI. Rally before BI and drop before BI. Yeah, because the share price has gone all ahead of the fundamentals. Yep. I think the share price has been a bit crazy for QL, and people would tend to push the price up before any corporate actions. So wonder QL will expand and venture into milk products like farm fresh. Yeah. Logically, I would say no, because if you really understand dairy farming, just a little bit sharing, I am currently in the dairy business. My company is doing dairy. So if you want to capture the upstream value of dairy, the condition in Malaysia is just not that suitable to rear cows. Farm fresh is the one of the surprise kind of company that managed to do it, but they still do it very small scale only. They still cannot reach the scale to fight your F&N and still cannot fight the other imported players as well. So output will be a problem and quality will also be a problem if you want to grow when you enter the dairy business. Quite likely if QL wishes to expand their business, I think I think the share price has gone all ahead of the fundamentals. Yeah, all of us can agree the convenience store within the Malaysia region can definitely do better if you compare with the convenience store in Thailand, in Japan, and also in South Korea as well. So yeah, I think, but what my Family Mart has just managed to do is to bring back the that convenience store vibes, feelings when we go outstation, be it in Taiwan or in Thailand. So it is a very good thing. That it's a positive thing to see that. And the very positive thing to see also is even though the things are expensive, but people are willing to spend. People have the capability to spend. It's just signify that in some ways the country is going in a good direction because when people spend money only the country can grow. Sometimes you tend to be worried that if things get expensive, people don't spend, then you have recession. But if things are expensive but people still spend, generally it's a good sign that the country and the economy is growing lah. So yeah, it's a good thing we have QL taking the Family Mart franchise and giving us the better convenience store experience that we usually have only when we go outstation. And yeah, another V is saying QL. Yeah, do your due diligence. Don't just make any investment decision based on this 1 hour sharing. 1 hour is definitely not enough, and we also don't feel right to go that deep. Take 2 hours of your Thursday night. Basically, we just share out good companies and the basic fundamentals. And sometimes you know the risk, you also know the prospect. Then you maybe just deal deeper into the risk, how big the risk is, how much the risk can impact the company's earnings. And from there, automatically you know what is the most comfortable price personally for you to invest in a company or not lah. So yeah, I don't know about you guys, but personally, I think it's quite refreshing to change the topic a bit this week to talk about QL. And for the past 2 months, we have been talking about Malaysia tech stock. I think moving forward, we'll also be focusing a little bit more on the FMCG companies. Yeah, Darren, what kind of companies would you want to see if I were to ask you now? We already have a company in mind, but yeah, you can give your suggestions because you might even get a hint of what we might talk about. Because eventually, to know how strong QL is, you also need to know how strong the competitor is. So if the competitor is strong, then definitely QL will face a little bit more challenges when it comes to growth. But if the challenger or the competitor is not that strong, then you will be more confident to buy QL because yeah, you will be more certain that QL will win when compared to their competitors. Wow, one thing I don't really like about plantation, I just share with you guys. One thing I really don't like about plantation stocks is there are a lot of things to check. So if you want to know plantation stock, basically your company, I buy land and then I need kind of land in my land and then I'll plant palm oil. And palm oil is not today you plant, tomorrow straight away you got palm oil already, you know. You need to wait for 5 years for the tree to grow from a small tree to a big tree, for the tree to mature, then only your workers can, you know, harvest the fresh fruit branch and then send it for palm oil milling. And the thing about the tree also, it will grow old. And when your tree go old, the palm oil or the fresh fruit branch it produce will also get lesser. And if you really look into how palm oil plantation companies sustain their growth, their big piece of plantation land, they will just segregate out. This plot mature in 5 years, this plot mature in 6 years, this plot mature in... So every year, at least they have something to harvest. If not every year harvest at the same time, and after 10 years, the whole plantation become old, they have to chop off the trees and replant again. Suddenly your company reports zero earnings. So that's why I don't like, first point, I don't like plantation already. Second point, very dependent on weather. Flood your plantation, if you have flood in your plantation, your palm oil tree die, kaput, you also don't have any palm oil to harvest. So already second point, and this kind of risk is by the God one, you cannot control one, want to float, want to have drought, it's really by natural weather you cannot control. This kind of risk is natural risk, hard to predict. I like to predict companies so that I have more confidence when I invest. But yeah, if we have the chance to look deeper into a plantation company, we will definitely bring up the same points as well, same kind of analysis that we do that I just previously let you know. And it's also quite it's also interesting to share with you guys lah. So you guys will also know what kind of business, what to expect, what to predict also. Maybe Lei Hong.
Yeah, I think one thing to share lah. I think every time I look back, our sharing, the viewership is there. Usually the like and the love is very low. If you guys don't mind, give us some like and share. I think it will be quite helpful. But I think next week we were thinking to talk about my news, but then Lei Hong is also one of the things that we can consider. We even think about Kawan, Power Road and all those things. It's all in the FMCG, but if you guys for something preferred based on the response, then we will do that one first.
Yeah, I think we previously done breweries already. During MCO, someone email us and talk about Carlsberg and Heineken. So that one we already made one session already. We don't want to talk about Nestle because everyone knows about Nestle, and even if I tell you very good, yeah, the business is very good, but one share is 100 plus ringgit. Not all of us have the kind of money or savings to even buy one lot of Nestle at today's price. So yeah, we won't talk about Nestle lah, because most of us know Nestle, and even I tell you also, you find it very difficult to just take out 10K to buy one lot of Nestle. So CAB, yeah, you are right. Yeah, CAB also have marine products. They have tempura, they have, but I think their package, I don't think they are doing marine. They are more towards chicken-based semi-finished products, chicken-based derivatives. Tempura, nugget ayam, bola ayam, nugget ayam. So yeah, a lot of their chicken, instead of sell you the fresh chicken, they convert it into semi-finished byproduct. And this kind of product can store longer as well. You can freeze it, you can maintain the quality longer as well. So yeah, I think let's see. I think a lot of good food companies as well we can schedule. We might also slot in a palm oil company just to share with you guys what can happen to a palm oil plantation company if things don't go well. Yeah, we will schedule accordingly. Thank you. And yeah, today we also overshoot the time a bit, but I hope you guys don't mind. It has been a very nice 1 hour and 22 minutes with you guys. As always, thank you always for your time. We feel very blessed to be able to do this every week. 1 hour, as always, 9 p.m. to 10 p.m. And yeah, we see you guys next week, and we look forward to seeing you guys as well in our next not so late night show. But yeah, before we just end, I think just one more question from Steve. How the poultry farming business prospect from Q1? Yeah, if you just followed the presentation just now, it's mixed negative because during MCO, people don't go and eat KFC, people don't dine out. So this kind of big restaurant joints, they also ordered less chicken from the chicken farm, and chicken farms like QR Resources will take a bit hit lah. Just a bit. So if COVID can continue to improve, then yeah, it will just be a temporary thing. So yeah, and it will definitely go bigger. You're right. Definitely will go bigger. It's just how patient we are if we choose to invest in an already big company like QR. So thank you very much. We see you guys next week. Take care. I know it's very dangerous right now, but just take care and stay alive. We will see you guys next week. Bye-bye.
Bye.